everyone. Today I will be presenting on the topic Shari'ah principles governing commercial transactions. Shari'ah principles provide the foundation for all commercial and financial activities in Islam. These principles aim to ensure that business transactions are conducted in a fair, ethical, and transparent manner. They emphasize justice, honesty, and mutual consent between parties, while strictly prohibiting elements such as interest, uncertainty, fraud, and gambling. In commercial transactions, Shari'ah does not only focus on profit, but also on social responsibility and moral values. Every transaction must be beneficial, lawful, and free from exploitation. Therefore, understanding these principles is essential in ensuring ethical and professional conduct in modern business and financial practices, especially in Islamic banking and commerce. Good day, everyone.
I will explain the differences between Islamic banking and conventional banking in Malaysia, focusing on their principles, ethical values, and banking practices. Firstly, the main difference lies in their fundamental principles. Islamic banking operates based on Shari'ah principles, which prohibit interest, known as riba, as well as uncertainty and gambling. Therefore, Islamic banks generate profit through trade, leasing, and profit-sharing contracts, and all transactions must be backed by real assets. Secondly, the relationship between the bank and the customer is different. In Islamic banking, the bank acts as a business partner, trader, or lessor, depending on the contract, and both parties share risks and returns. Thirdly, these principles reflect ethical and professional conduct in financial dealings. Islamic banking emphasizes fairness, transparency, trust, and social responsibility. Investments are restricted to halal and ethical activities, and contracts must be clear to avoid exploitation. Lastly, these differences can be seen clearly in banking practices in Malaysia. For example, Islamic banks offer home financing using musyarakah mutnakisa, or ijara. Islamic savings accounts operate on profit-sharing concepts such as mudarabah or wadiyah, whereas conventional savings accounts offer fixed interest. For the principle of conventional banking, it contrasts with Islamic banking, it operates based on conventional financial principles and earns profit mainly through interest-based lending. Beside that, in conventional banking, the bank acts as a lender, while the customer is a borrower who bears most of the financial risk. Moreover, it focuses more on profitability and efficiency, with fewer ethical restrictions as long as the activities are legal. For conventional banks, they also provide housing loans with interest. In conclusion, Islamic banking promotes ethical, transparent, and responsible financial practices, while conventional banking focuses on interest-based transactions. Both systems coexist and contribute to Malaysia's financial system, but are guided by different principles and values.
Ethics and professionalism are fundamental principles that support the legal and moral frameworks governing both employment law and Shari'ah commercial transactions. In employment law, they ensure fairness, justice, and equity between employers and employees, act with integrity, and respectful work environment. This part analyses how the principles of Islamic banking and conventional banking reflect ethical and professional conduct in financial dealings. Firstly, in terms of ethical basis, Islamic banking is founded on the principles of Islamic Shari'ah, which emphasize morality, justice, and responsibility. On the other hand, conventional banking is based on man-made principles and is guided by laws, regulations, and professional standards. Next, regarding fairness in transactions, Islamic banking promotes profit and risk sharing between the bank and the customer. This ensures fairness to both parties. On the other hand, for conventional banking, the borrower bears most of the risk through fixed interest payments.
From the aspect of avoidance of exploitation, Islamic banking strictly prohibits interest and unethical practices to protect customers from unfair financial burden. Conversely, conventional banking assures investors a predetermined rate of interest regardless of the borrower's performance. For transparency, Islamic banking requires clear disclosure of contract terms, risks, and profit-sharing ratios to avoid uncertainty. while conventional banking also practices disclosure. Interest obligations remain fixed and must be paid by borrowers. Regarding accountability, Islamic banks are supervised by a Shari'ah advisory committee to ensure ethical compliance. Conventional banks, however, are regulated mainly by financial and legal authorities. In terms of social responsibility, Islamic banking ensures that funds are used only for halal and beneficial activities. Conventional banking focuses more on promoting socioeconomic development within legal boundaries. Finally, in professional conduct, Islamic banking emphasizes honesty, fairness, and protection of public interest, while conventional banking focuses mainly on fulfilling contractual obligations and achieving financial returns. Overall, Islamic banking demonstrates a higher level of ethical and professional conduct by promoting fairness, transparency, accountability, and social responsibility in contrast to conventional banking, which emphasizes interest-based profitability.
In the Malaysian banking system, the differences between Islamic banking and conventional banking can be clearly understood through the actual products offered to customers and how these products operate in daily financial transactions. One common example is murabahah financing, which is widely used by Islamic banks in Malaysia, such as Bank Islam Malaysia Berhad and Maybank Islamic. In a murabahah transaction, the bank does not simply lend money to the customer. Instead, the bank first purchases the asset requested by the customer, for example a car or household equipment, and then sells it to the customer at an agreed profit margin. The total selling price is clearly stated at the beginning of the contract, and it does not change throughout the financing period. This approach reflects transparency and fairness, as the customer knows exactly how much they need to pay. In contrast, conventional banks usually offer interest-based loans, where customers repay the loan together with interest. The total amount payable may increase over time depending on interest rates, which can burden customers financially. In the Malaysia, another example can be seen in Mudarabah investment accounts offered by Islamic banks in Malaysia. Under this arrangement, customers act as capital providers, while the bank manages the investment activities. Profits generated from the investment are shared based on a pre-agreed ratio. If losses occur, they are borne by the capital provider as long as there is no negligence by the bank. This reflects the Islamic principle of risk sharing. On the other hand, conventional banks offer fixed deposit accounts where customers are guaranteed a fixed interest return regardless of the bank's investment performance. This shows a clear difference, as conventional banking transfers risk to the bank while still guaranteeing returns to customers. In addition, Islamic banking in Malaysia provides takaful as an alternative to conventional insurance. Takaful operates on the concept of mutual cooperation, where participants contribute to a common fund to help one another in times of loss or difficulty. This system promotes social responsibility and collective welfare. In contrast, conventional insurance is based on risk transfer, where the policyholder transfers risk to the insurance company in exchange for premium payments. Furthermore, Islamic banks in Malaysia ensure that their financing activities comply with Shari'ah requirements, meaning they do not support businesses involved in gambling, alcohol, or other non-halal industries. Conventional banks, however, may finance such businesses as long as they are legal under Malaysian law. Overall, these examples show that Islamic banking practices in Malaysia are not only different in structure, but also in purpose, as they emphasize ethical conduct, transparency, and social responsibility, while conventional banking focuses mainly on interest-based profitability. Furthermore,